Welcome to the Long and Short. Maestro here. Thank you for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you smart money price action trading techniques from a long and a short-term perspective. What you've tuned into is the final installment of how to be a successful trader in cryptocurrency. We've walked people through essentially the starting point all the way to the finish point, which is building your portfolio. So welcome to the last installment of this series. Let's go ahead and dive right into it. So, target portfolio allocation. Well, this all harkens back to what you did for your watch list, okay? So ultimately what we're doing right now is we're translating all of those things that we watched on our watch list, and now we're trying to incorporate this into an actual portfolio. Now, we're not just gonna go on a big buying spree and buy everything at one time and end up with this allocation. It's gonna take time for your portfolio to start to get to this level. But what we're highlighting here is that your allocations aren't really changing in regards to what you're investing in from your watch list to your actual portfolio. You still want to try to maintain around 70% blue chips, 20% mid caps, 7% low caps, and around 3% no caps. And we explain what no caps are, right? Essentially coins that are brand new. And go back to these videos and watch what we were explaining there. We kind of break it down a bit more in depth in that video. But take what you have from your watch list and you want to apply that to your actual portfolio now. All right, so building your portfolio, how are we going to do it? You want to start small, right? You want to choose an exchange based on your trading criteria and your trading style. And you also want to become familiar with the exchange and the way that it works. How do you deposit money? How long does it take for the money to get there? How do you transfer money? How do you withdraw money? Okay. How do you actually trade on this thing and the types of orders? Become familiar with this all before you do any real active live trading on this exchange. Now, in my opinion, I always think it's good to start with at least 2 to 5 coins to build your portfolio. You want to have blue chips definitely, whether it's Bitcoin or Ethereum or both. And you want to have a couple of mid caps in there as well. I wouldn't recommend low caps right off the bat. I think that you have to do a little bit more research and let these mature just a little bit before you just throw them into your portfolio. So if you've done the research and you really understand what you're looking at, then low to no caps are accepted, but this isn't something that I would do with a brand new portfolio, right? After I've taken some wins and gotten some money, then that would actually be what I use to get into the lower cap coins. Only buy when the opportunity presents itself. So this is the biggest thing when it comes to building a portfolio. You're going to be anxious after learning all of this to just go in and find a position and get into it and see if it works. But you want to be patient. Wait for the opportune areas to buy. If you've drawn these levels on your charts, don't be so anxious to get in there and trade ahead of them. Let the market work for you and let the market come to the areas where you want to capitalize, and it'll work. Now, expansion. Eventually, you're going to want to get around to adding more to your portfolio, right? But do it based on research. Don't just go because you heard someone say something and, oh, I'm buying this today. Don't be that guy, all right? Don't be that girl. The reason why is because you understand how important research is at this point, and you don't want to abandon that. You don't want to turn into the meme coin investor after you have been the research-based investor. That's not the way to go, all right? Also, diversification. Uncorrelated coins, layer 1, layer 2, crypto sector, depending on which crypto sector the coin is in. You want to diversify what you're getting into your actual portfolio. So if you have all layer 1s, get some layer 2s. If every coin that you have always moves up, right, on the day that Bitcoin moves up, get some coins that move up when Bitcoin moves down. You want to diversify, right? And this is the best way that we think you can do it. Just find uncorrelated coins, layer 1s, layer 2s. Depending on which crypto sectors you're interested in, you want to diversify into those sectors along with, the main blue chips like Bitcoin and Ethereum. Now, when it comes down to managing your actual portfolio, there's a couple of simple rules that you really just need to pay attention to. It really all depends on what your ultimate goal is in terms of management. So if you plan to hold for years, okay, you don't have to sit there and babysit your portfolio. In fact, it's recommended that you don't. The price swings and fluctuation in price will make you panic sell to a certain degree if you're looking at your account every single day. If your goal and your intention is to hodl and not sell Bitcoin for 5-10 years, then don't watch your account every day, right? It's almost futile to do so. If you're swing trading, you're going to need to actively manage your portfolio, right? So if I'm in a swing trade and I'm only in for a few days, I need to sit in that trade and watch my portfolio. I need to keep the charts open to understand if price is swinging against me too aggressively or if my idea is wrong, okay? Because swing trading can start off really nice one day and completely reverse the next day. So you want to be aware of that type of action if in fact it does happen, okay? Portfolio management is done best from the price charts, meaning TradingView. If you're able to go into your account on TradingView and watch where the levels are in price that price is moving to, that's your best bet. Sometimes these brokers and these exchanges, they make it hard to view the price chart itself on purpose. If I don't know where the price level is and where my markings are for entry and exit, it's hard for me to track what I'm doing. So I'm tracking all of my trades via TradingView rather than the broker themselves. Also, your portfolio should not grow beyond what you can manage. If you have too many coins in your portfolio and you don't know where things are allocated and you don't know what's happening with this wallet versus that wallet, you're growing too large. Consolidate things. Put things into a manageable perspective. That way you're not losing coins, or losing wallets or losing opportunity based on just you losing track, right? You want to keep track of everything that you're doing. And of course, you want to set limit orders and stop losses to grow and protect your account. This is the automated way to do it. This is the easiest way to do it. And so ultimately, if you're able to set up these limit orders, you're able to just kind of set it and forget it when it comes to the market. Through our tutorial, these were all of the things that we were teaching and showing you guys. And hopefully at this point, you're able to do some of this stuff like drawing up your charts, automating your trades, setting your limit orders, not being afraid to push the button on market orders. And you're in a good spot if you're able to do that. Okay. So we're going to leave you guys with some parting words here. Some things that I think everyone should be aware of as we start to close out this tutorial. It's really all up to you guys. All right. Trading is not a team sport. It's an individual effort in most ways, but that's only when you're in the trade. No one should ever tell you when to enter, when to exit, how to enter, exit, because that should only be up to you. It's your capital, it's your risk. So don't rely on anyone else, guys. And if you're able to do this, then you will go from a losing trader to a winning trader. I can almost guarantee it. It's not a team sport. It's an individual effort that sometimes requires a team to get you up to speed on how it works. But when you're pushing that button, it's only you. Finding a good mentor is important, but it won't make you a good trader. The only thing that's really going to make you a good trader is whether or not you're willing to go through that trial by fire that we talked about in the first session. So you got to be willing to take those bumps. You got to be willing to experience the losses and get over those emotions. Once you're able to do that, you're in a good place. Good traders are made from experience, not lessons and courses. I can drop 1 million tutorials. I can teach you guys something new every single day, but that doesn't mean anything if you're not willing to take it to the next level and work on yourself to take those lessons in those courses, learn from those things, control your emotions, and become a better trader. Fighting through the initial discouragement is what will separate you from the herd. As long as you're learning from your mistakes, you're going to be good, folks. And I had to learn this the hard way. I gave up at one point because I was following the herd. I was following what the new indicator my friend showed me, or I was following the new guru on YouTube that my friend found. And he showed something that I never seen before. I went through all of that, guys, which is why I created a YouTube channel in the first place. So fighting through that initial discouragement, fighting through those losses, it's what's going to make you a better trader. Never stop learning from the proper resources and your experience in the market through journaling. Make sure you're keeping that journal, folks. It's very important. All right. So your portfolio should consist of a mix of large, mid, small cap coins in various different ways, right? Now, what you choose to invest in is completely up to you, but this is the mix that we think you should have in your portfolio. Also, you want to start small, expand over time. Don't go and throw 20 coins into your portfolio right off the bat. Give yourself some time to learn and grow over time. And understand that patience is a virtue when it comes to this. You want to enter into positions based on predetermined levels that we've already showed you guys how to draw. Manage your portfolio from the price charts, not from the numbers in the portfolio. Okay, it's very easy for you to say price is going up 20% today and it's going to go up 20% tomorrow. Well, if you look at a chart, if you're near that all-time high, it's probably a good time to sell, even after a 20% gain. Manage it from the price charts. Do not hold more positions than you can actively manage. That's a pretty simple rule to follow. And remember, guys, it's up to you. But I'm also here. If you understand the concepts that we've given you guys today, and if you've used some of this stuff and it's made you a better trader, then definitely, please go ahead, let us know that in the comments section. And just remember, guys, it's up to you. All right, so good luck. Happy trading. It's your boy Maestro. We do want to thank you guys for tuning into this tutorial. If you have any questions about anything that we've displayed, anything that we've talked about in this tutorial, in this group or sets of videos, please leave it in the comment section. We will be responding. Please like, subscribe, share, click that bell notification if you learned something today. Follow us on all of our socials. We do tend to kick up some information and talk out there as well. So, it's your boy Maestro. This is the long and short. And this will conclude our tutorial on how to be a better crypto trader. Hopefully you found it informative. Thank you all for joining. Salute. We up out of here. Peace.